Good morning. Hello. Okay, so yesterday we are talking about the leading ledger. So the concept of leading ledger is very clear about. Okay, so the leading ledger is called as the parent ledger. Now there is a one more ledger we need to more discuss on that. That is called as a non-leading ledger. The concept is going to be called as a non-leading ledger. Why do we create a non-leading ledger? So the concept. Okay, so when I see here. And one more thing, please make a note of this. So many people will be in a confusion that non-leading ledger and the leading ledger are defined with a different settings. No, lead ledger type is going to be the same. Whether it is a leading ledger, it is going to be called as the standard ledger. Whether it is a non-leading ledger, also it is called as the standard ledger only. But the only one change is nothing but the leading ledger is going to be indicated by selecting the checkbox, and the non-leading ledgers are going to be selected, deselected with the checkbox. That is only the thing. But the ledger type is going to be the same for the both of them. Please don't confuse. Ledger type is going to be the same. So whether it is a leading ledger, the ledger type is a standard ledger, and if it is a non-leading ledger, also the ledger type is going to be called as a standard ledger. We have two standard ledgers. One is leading ledger, another one is the non-leading ledger. But what is the purpose of the non-leading ledger? We understood about the concept of leading ledger, but what is the purpose of the non-leading ledger? So we have only one company code. Assume that we have only one company code. We are doing the transactions. All the transactions are done with only one company code. The company code is called as the US 10. US 10 is my company code. So my reportings are maintained based on the IFRS standard. So for this, I created one ledger which is called as my OL. That is called as my leading ledger. And I'm doing all the operations in the fiscal year. That is from the Jan to December. And my currency is going to be the USD. This is the setting this is what exactly the assignment which I have done to my company code. Up to here, this is very good. So there is no issue from my side. But within the same company code, when you are doing any transactions, very, very important. Within the same company code, the company code is going to be the same, but I'm doing a lot of transactions like, okay, so I'm doing some, okay, billings, I'm doing some sales, I'm doing some purchases, I'm making some payments to the vendors and customers, okay? So I have some business areas in my other countries also. So for example, in other countries, let me take one example here. So I'm taking here 3 examples. So I'm doing my operations in India. I'm also doing my operations in Germany. And also I'm doing my operations in Australia. Example I'm going to be taking. In Australia. Now, the company code, okay, so when you come to the company code, all the transactions we are maintaining with only one company code. Means I'm not creating every company code for each and every country level. I'm doing all these operations. I'm doing all the transactions within the same company code. Okay, so all the transactions are getting posted within the same company code. But when you come to India, the fiscal year is going to be the fiscal year, the financial year, what we are going to be doing, that is going to be from the April to March. But my reporting system here is according to the Indian standard. So what is the reporting you are going to be using? The reporting standard I'm going to be using called as Ind AS. Like we are using IFRS for US 10. Okay, according to the Germany, they're going to be they're doing the okay. So they're also having the same Jan to December. Okay, but the reporting system is going to be they're using the local GAAP, and here I'm going to be using from October to September, and here here also going to be the same IFRS or something like I'll take it as a local GAAP only. Okay, very good. Okay, so this is what exactly. Now. Apart from my local reporting, apart from my local IFRS reporting, which I'm going to be addressing with my leading ledger for my US 10 company code, apart from that, for my US 10 company code, I need to have other reporting systems also. I need to have other reporting standards because I want to report in India based on the Ind AS. I want to prepare a financial statement for Germany based on the local GAAP from Jan to December, and the same thing I need to do for the local GAAP for the Australia from October to September. because all the transactions I'm doing with single company code. I'm not maintaining different company codes for India, Germany, and Australia. I have only one company code, but I want to have the reports to be maintained based on the local standards for India, Germany, and Australia. But you can't address with the one ledger. You cannot address all the reportings with one ledger. Very, very important, because we are going to be coming out with two approaches. One is going to be called as ledger approach. Very please make a note of this. Ledger approach. And the second one we call it as the accounts approach. Accounts approach. There are two approaches are there. One is called as the ledger approach, and the second one we call it as the accounts approach. There is a difference is there between the ledger approach and the accounts approach. When you come to the ledger approach, when we want to set our settings to a company code at a ledger approach means very, very important. At one ledger, you can assign only one accounting principle. Here, if I see here, OL is assigned to IFRS, whereas for Ind AS, local GAAP, and the another local GAAP. Here I have the two local gaps and one Ind AS is there. Or otherwise I'll do one thing like this. Okay. So I'll change this. Okay. So for example, not to confuse, I change this to another gap. Okay. So they're going to be using according to the AU gap, Australia gap. Okay. So AU gap. Okay. Now, if you see here, they have three different reporting systems are there. But when I come to the ledger approach, in the ledger approach, only one accounting principle should be assigned to one ledger. The concept is very, very clear. Means if you are taking the OL as a leading ledger, OL is assigned to the company code US10 for which reporting for IFRS only. Yes, I can also assign, but I can also assign another reportings like Ind AS. I can also assign AU10, that is AU gap, like I can assign different accounting principles. But here, if you see here, one ledger with a different accounting principle. In this case, I should not call it as a ledger approach. I should call it as an accounts approach. I should call it as an accounts approach. So what I have to do here in this case, I need to maintain separate set of GL accounts for IFRS. I need to maintain separate set of GL accounts for Ind AS. I need to maintain the separate set of GL accounts for the AU10. Why? Because now you are deviating from the ledger approach to the accounts approach. Yes. So when you come to the SAP, when I selected only one ledger, forget about the second ledger, forget about the non-leading ledger here. Just select only the one ledger, that is the OL. Okay, one second. Okay, now just okay. Now I'm selecting only one ledger. I know this. Okay, this leading ledger is assigned to all the company codes. Okay, there are 36 company code. The leading ledger has been assigned, but I'm selecting my company code because I just told that only one company code with multiple accounting principles. So I'm selecting only one company code, and here we have a concept called as accounting principles for ledger and the company code. Now what I'm going to do here is just if I double click on it, now here. If you see here, means my company code earlier, my company code OL has been assigned with only one accounting principle. That accounting principle I'm going to be taking is an IFRS. Now, this is my IFRS something like, but if I see here, local GAAP, okay, something like. So if I see here, one accounting principle, now it has been assigned with multiple accounting, one ledger is assigned with multiple accounting principles, means you're not addressing these gaps. You're not addressing all these reporting systems with the different ledgers. You want to have all the reportings within one ledger, but it is not called as the ledger approach. You are deviating from the ledger approach to accounts approach. If you see here, there are totally 66 accounting principles. Totally 66 accounting principles I have assigned to one ledger. Means it is called as a accounts approach. It is not a ledger approach. So what I need to do here, I need to maintain the separate GL accounts for Argentina GAAP. I need to maintain a separate GL account for Austria. Like that, if I see here, all the company codes means all the country gaps have been assigned to one ledger. So this concept, we call it as the accounts approach. If what I will do here now, I'm just selecting everything. I'm just selecting everything here. Okay, I'm just selecting everything and I'm deleting. Okay, now I'm deleting. Okay, now I deleted everything. Now, if I see here, now the company code with the ledger is empty. Now I'll go to the new entry and I will assign only one accounting principle, that is IFRS. IFRS is nothing but my accounting principle. Now, if I press enter, now I got IFRS is only one accounting principle. Means for this company code, the leading ledger, I have maintained only for the IFRS, not for any other reporting system. For all the 66, hey Mahesh, do one thing. Mahesh, do one thing. Okay. So what about the other countries then? What about the other countries? So what I will do here for other countries, I'll create a non-leading ledger. I'll create a non-leading ledger. For India, I will create L1. And for the Germany, I'll create L2. And for Australia, I'll create the L3. So don't worry. So you are going to get all the reporting systems, but I'm not going to be assigning all the three accounting principles to one ledger. So what I'm going to do here is I will create a separate ledgers for each and every country level, and whatever the reportings you want to maintain. So I can assign all this accounting principle to each and every ledger. L1 is assigned to Ind AS. L2 I am assigning to local GAAP, and L3 I am assigning to the Australian GAAP. So I'm creating three non-leading ledgers. So this concept is called as ledger approach. So in this case, no need to create a separate set of GL accounts. You can address all the reportings with the non-leading ledger, and for the main ledger, I can use it for the OL for the IFRS. So here, I have been assigned only one accounting principle to one ledger for this company code. This is what exactly I call it as the leading ledger now. I call it as the leading ledger. But no, Mahesh, don't create any kind of non-leading ledgers. Okay, don't create any non-leading ledgers. Okay, anyhow, I want all the three reporting. So why can't you assign one ledger, and why can't you assign all these three accounting principles to one ledger? Then in that case, what I will do here, in that case, I will assign all the principles over here, all the required principles. So German GAAP, and I will assign the UAE GAAP. And what I'm going to do, I'm assigning the Australia GAAP, everything here. Now, what I'll do here, if I press enter, entry exists with the same key. So already something, okay. Now I'll take another, okay, Belgium something. Okay, now I am assigning all the three accounting principles. So what does it mean that now? One ledger, what does it mean that now? One ledger with multiple accounting principles, So in this case, the system is going to expect you are deviating from the ledger approach to accounts approach. Then what I should do here? Then go back. Just don't say, okay, I'm not saving anything here. Go back. And here, if we just come back, just scroll down to right-hand side, there is the option called as selection checkbox. Then if you are using the accounts approach, not the ledger approach, then you need to select the checkbox, because which is going to be called as the parallel GL accounts. Every accounting principle, you need to create a separate set of GL accounts to address their own local standards. That is what exactly we can call it as a local customization. We have to address the local standard. They have their own accounting principles. So I need to create the separate set of GL accounts for India, separate set of GL accounts for Germany, separate set of GL accounts for Australia to address all my reportings which have been assigned to one ledger. So here there is an option called as parallel GL account. So when I go and click on F1, so it is very clearly telling that the parallel GL accounts, additional GL accounts are going to be required. Indicate that this company code, you are going to do the parallel accounting using GL accounts instead of different ledger approach. Then what it is going to be? So what exactly the drawback here is? So it increased the transparency in the system. So it increased the transparency in the system. If you set this indicator, you're most likely to assign more than one accounting principle to the combination of ledger and the company code. That's what exactly I'm going to do. In addition, by setting this indicator, the system suppresses, okay, the corresponding message that you have been assigned too many accounting principles to the same combination of the ledger and the company code. So what does it mean? That now, if I'm not selecting, forget about if you're not selecting the checkbox, but in spite of that, if you see here, now, if you see here, if you see very carefully here, so now there are 66 accounting principles have been assigned to the same company. It means that it is an accounts approach. It is not a ledger approach. It's very clear to us. Now, if I'm selecting and deleting everything, and total, okay, total number of entries deleted, that 66 entries I deleted now for my reporting. Now I'll go for a new entry and I will assign only 3 accounting principles. IFRS, okay, something like I will use something and I will use the AEPP something whatever. Okay, now I'm assigning only 3 accounting principles. So what does it is telling? That accounting principle USAP 1002 assigned to the OL, AEAP assigned to the OL, and IFRS has been assigned to the OL. Very good. Now, if I save this, if I save or if I go back, now what I have to do, the system is going to expect, now you need to select the checkbox. Yes, I need to select the checkbox. So when you should select the checkbox? When I have assigned the 3 different accounting principles to one ledger. If it is not accounts approach, then what does that mean? That if it is not accounts approach, forget about that, Mahesh. Okay. So I want to use the ledger approach to address all the 3 different accounting standards for 3 different countries. Now, what I will do here in that case, what I will do, I will create 3 ledgers. Okay. I'll create 3 ledgers. One is L1, another one is L2, and another one is going to be the L3. L3, L1, and L2. So these 3 are going to be called as the non-leading ledgers. So the non-leading ledgers will inherit the same currency settings of the leading ledger. Point number 1. Please make a note, certification question, please. I'm writing over here all the things. Non-leading ledger will inherit the same currency settings of leading ledger. Point number 1. What does it mean that? When you are assigning the 3 non-leading ledgers to one company code, where the leading ledger has been assigned to the same company code, for the same company code, L1, L2, and L3 is getting assigned. So which currency you have assigned to the US company code? I have assigned the currency called as USD. Then in that case, the same currency settings are going to be addressed. Means it will inherit the same currency settings for all the 3 countries. Very, very important. Please make a note. First point number 1. So non-leading ledgers will inherit the same currency settings of the leading ledger. Point number 2. There is a deviation in fiscal year and posting period. What does it mean that? Anyhow, the non-leading ledgers are going to be inherited with the same currency setting. That is very good. So when you are assigning all these 3 ledgers to the same company code, so whichever the currency you have assigned to the OL, the same currency will be assigned to all the 3 ledgers. But there is a deviation in the fiscal year and the posting period. What is the fiscal year? Fiscal year is nothing but your financial year. Fiscal year is nothing but your financial year. Yes. For the leading ledger, it is Jan to December. But when I come to the three different countries, India, it is April to March. Germany, it is Jan to December. And Australia, it is October to September. I cannot do the same fiscal year variant to all these three countries. Because I'm going to address all these three accounting standards based on my fiscal year only. I cannot tell that India from today onwards, I can operate from Jan to December. No. According to the Indian standard, the fiscal year is going to be open in the month of April and it will close in the month of March. And the same way for Australia, the fiscal year will be open in the month of October and will be closed in the month of September, like Jan and December. I cannot change my fiscal year. But what is happening here? There is a deviation in the fiscal year and the posting period variant. Yes, leading ledger is going to be having a different fiscal year and the non-leading ledgers can have the different fiscal year variants also. So, and this is what exactly the definition is going to bring, that is there is a deviation in the fiscal year and the posting period variant. Now, third point, number 3. All the postings will be derived from leading ledger to non-leading ledger. Okay. All the postings will be derived from the leading ledger to non-leading ledger. So normally when I'm doing any transaction, something like when I'm doing any kind of transactions in SAP, so I'll just remove this point. Normally when I'm doing any transactions in my SAP, if I'm making a posting like rent expenses, account debit to my cash or bank account. Okay, normally cash or bank account credit. Now, if you see this accounting entry, normally this accounting entry I'm posting at a company code level. So what is my company code? My company code is US10. And make sure that please understand everybody that I'm not creating a separate company code for all these three countries. No, I'm not creating, but I am addressing all the reportings based on my ledger approach. That is L1, L2 and L3, and all these three ledgers I am assigning to the same company code. All these three ledgers I am assigning to the same company code. So here, when I'm creating the three ledgers, so I'm writing here the text here.
Hello.
So now if you see here, I created the three ledgers. And here don't select the checkboxes because these are the non-leading ledgers. So I should not select the checkboxes, but the standard ledger is going to be the only the one. The standard ledger is going to be the one. Now I'm saving the data. I save the data. In the background, see here, this is what exactly. In the background, automatically for every ledger, the system will create one ledger group. I'll tell the concept what is the ledger group. Now this is the information. In the background, automatically, whenever you're creating any ledger, sir, there is a background noise, please. If you don't mind, somebody who is unmuted, can you mute your phone, please? If you don't mind, please. Okay. So the ledger group is created in the background. So I see one ledger group for the L1 and the second ledger group for the L2 and there will be one more ledger group is created for the L3. So all the ledger groups, I'll tell you the concept, what is the ledger group? I'll tell. Now, I created all these three ledgers. Now, what I'll do here, I need to assign to one company code. So what I'll do here, I'll select and double click on company code settings. And here, it is a non-leading ledger. The non-leading ledgers are assigned to selected company codes only, because these particular non-leading ledgers, whatever the L1, L2, and L3 I created, this is only for one company code. It should not be assigned to all the company codes. So SAP is giving a new entry option for the non-leading ledgers. And here you can make sure that you are assigning to the company code called as 1710. My company code is going to be called as the 1710. Very important. And when you press enter or something like, if you see here, this L1 I'm using for Australia. For Australia, the fiscal year variant is October to September. But I'm assigning the L1 to 1710. But for the 1710, what is the ledger you are assigned? OL. OL is nothing but which is going to be having the fiscal year from the Jan to December. But here I have an option to change that fiscal year from the Jan to December to October to September. Now here you can see here, I'm making it as October to September. Very important. Very important. But it is not a parallel accounting by using the GL accounts. It is not a parallel accounting. Why? Because very important. Because I'm using the ledger approach. I'm not using the accounts approach. So don't select the checkbox. But what happened to the currency tax? I told that the non-leading ledger will inherit the same currency settings of the leading ledger. When I see this currency settings, the local currency which I have assigned is going to be called as a 10, and the group currency is going to be called as 30. And what is the currency type for the group currency? Maybe euro or something. So whatever the currency settings you have made it for the leading ledger, automatically when I press enter, it will be inherited to the non-leading ledger. So here we don't have an option to give your own currency type. It has been grayed out. You can see here, it has been grayed out. Now, if I press enter, you are assigning a new ledger to the company code that has been added. Okay, so okay, in this ledger assigned to the company code, let it added over here. Okay, the project must be for the product to company codes. 1 second, I'll change it. Okay, so I'll change it. 1 second. These people always. 1 second. 1 second. Because it is a practice system, so most of the people are changing the settings over here. Still I'm getting the project here. 1 second. I need to. So don't worry, I'll look into this. Okay. So for a meanwhile, so I mean, not to waste. Okay. So in the leisure time, I'll do the settings. Okay. I'll explain you because I need to check all the settings. Okay. Now what I'm going to do here is now when I'm assigning the company code for the non-leading ledgers, so I'm going to be selecting the October to September. But very important here is I cannot change the currency type. The currency types will be automatically get defaulted here from the leading ledger for which the company code has been assigned to the leading ledger. Very important here. So the point number one is very clear here. So the non-leading ledger will inherit the currency settings of the leading ledger. So here I cannot have the option to maintain the different currency types. So the currency types automatically, the local currency will be the 10 and the global currency will be 30. So from where it will be getting inherited, these two currency settings are getting inherited from the leading ledger. And there is a deviation in the fiscal year, yes, definitely. Leading ledger for OL, it is Jan to December. For my fiscal year variant for the non-leading ledger is going to be the October to September. Third point, number 3. All the postings will be derived from the leading ledger to non-leading ledger. So what does it mean? That whenever I'm doing any kind of postings in SAP, whenever I do any kind of postings in SAP, for example, if I do one posting in SAP, so I'll open one posting which I've already done in my SAP. So when I see the transaction, so there are 3 transactions are there. Okay, document number 1012. Okay, there are 3 transactions. These all the transactions are posted to my company code, which is going to be called as the 1710 company code. But once any transaction means here my electricity bill and utilities have got debited and my petty cash account has got credited. I had done this posting in my SAP. So once a transaction has got posted, now if I just go into the ledger approach, so which are all the ledgers have got updated? See, so all these ledgers have got updated, including my leading ledger. I can see there are other ledgers are also getting updated by posting of this transaction. But I never update any ledger while I'm posting any transaction. I never update. So I do normally the transaction without any ledger. So F-02 is the transaction. And here, when I want to post any transactions like the electricity bill expenses to my petty cash, here there is no option I will provide to which ledger the transaction should be posted. No, there will be no field. If you see here, date is there, number is there, reference is there, everything is there. But there is no field which tells about my ledger, whether it is a non-leading ledger or a leading ledger. No, nothing. So once a transaction has got posted in SAP, these transactions will be get posted to the leading ledger, and the same transaction will be get inherited to other ledgers also. So vice versa, you can see here. This transaction by default, it has got posted to the OL. And if I want to see what are all the ledgers which have got updated, means I need to go to the other ledgers. I can see these ledgers, including the non-leading ledgers, every ledger has got updated over here. So the point number 3 is all the postings will be derived from the leading ledger to non-leading ledgers. Now, what is happening here?
Excuse me.
Yes, ma'am.
I have a question like, so how we are gonna know that entry electricity bill entry is for India, Germany, Australia? So how we are gonna know that?
Exactly. Thanks for asking this question to me. Okay, so now we know that OL we have maintained for the IFRS example. Now I want to see this entry for other ledgers. So what I'm going to do, I'm selecting the 2L. 2L is going to be the other ledger. Now, if I press enter, this ledger is getting updated to the 2L. Or, hey Mahesh, do one thing. Whatever the postings I'm making now, okay, you are telling that once a transaction has got posted to the OL, or by default, I can see all the 3 ledgers are going to be derived. I don't want. There is a one transaction I would like to post only to the L1. It should not impact to OL, or it should not impact to L2 or L3. Only L1 has to be get affected. So what I will do here, I had to go. And first I need to see whether the ledger group is created or not. Once its ledger group is created, there is a transaction code called as FB01L. L is nothing but ledger. So here what I'm going to do, if you want to see the posting should be done only for L1, then what I will do, I will use a separate transaction code called as AB01L, which is called as the ledger specific posting, which we call it as a ledger specific posting. I'll press enter, and here I will give the ledger group only L1. See, where is the L1? I can see here now. Where is L1? So my L1 is here, okay, or India it is L2. So what I will do, I will give L2, so that what is happening, it is not going to be posted to OL, it will not get posted to L1, and it will not get posted to L3. It will get only updated to L2 only. So in this case, I'm going to be posting to one ledger only. Clear, madam?
Yeah, so when we are going to make our income statement for leading ledger, like which is going to include everyone, India, Australia, then if you are grouping it only with ledger 2, then how it is gonna consolidate it?
See, consolidated is going to be the difference. See, my purpose here is nothing, but I want to have an individual financial statement for each and every ledger wise. So if I want my financial statement like income statement or whatever the statement you are going to be expected for the US 10, I will get all the data from the OL. If you want the income statement for India, I will get it from the L1, L2. That is what exactly the concept of ledger approach, what I'm going to be using here. You have all the three different ledgers, no, madam. So you can extract, you can get all the data from all the three individual ledgers for India, Germany, and for Australia. And when it comes to the US, according to my IFRS, I will use the OL.
Okay, but if it is not posted in OL, it is only posted in L1. So correct. How can we extract that data?
How can we extract the data? So that is the reason what I'm telling here. If the posting should not be impacted to other ledgers, if it is only country specific related postings only, country related specific posting. If it is a country related specific posting, then I need to update the L1. I don't want that statement to be updated in my OL. If it is a country specific, that has to be updated in L1 or L2 or L3. Then in that case, I should not have any impact to my OL, no, madam. So I don't bother about what transactions you have posted to L1.
So when we are going to have a consolidated report for a company, because here it is you have only one entity. So how we are going to get that?
The consolidated reports you are going to be getting based on the group currency, madam. Anyhow, I am having the group currency here. Group currency is going to be defined for all the three currencies. So group currency will never change. So my group currency is, for example, it is going to be the euro or whatever maybe, or it is the USD. So I'll get all the consolidated report based on the global currency. I have the group currency concept.
Okay.
But in this case, basically the postings to L1 ledger will not be in Indian rupees. It will be in USD, right?
Exactly. But the conversion factor is there, no, sir. That's what exactly. I'll come to your points, sir, now. Okay, I'll explain you the concept. Now, what I'm going to do here is, the currencies are going to be inherited from the ledger group from the L1 to L1, but already I have maintained the currency translation rate between the USD to INR. So my transaction currency will be the USD, but what is happening when I want to see the reports, I have all the transaction currency. One USD is equal to how much INR. Already yesterday's class, if you see here, there is a real-time conversion I will going to be maintaining in the exchange rate spreadsheet.
Right, but when it gets posted to ACDOCA, the transaction currency will be USD, group currency will be USD.
Okay.
And but there is no question of company code currency because it still falls under US 10.
Exactly. So what so here, if we see here, sir, so what I'll do here, I will not give the USD. So here, in that case, 2020. Now, if I come to the company code, so what I will do, I will not update with USD. I will change it to INR here. I have an option called a change it to INR, not in USD. But according to my local currency is a USD, but I'm posting the transactions not in USD, but I'm posting the transactions in INR. So what is the translation date I need to take from USD to INR? Today's date, 05/01/2020 I will take, and then I'll post the transaction.
Okay, so that would be good when you specifically post in L2, but the other transactions which you're posting in the leading ledger, In that case, the entry that goes to L2 will still carry USD as a transaction currency.
Then
it will not have INR, right?
No, that will not have INR. Why? Because I told that the currency settings are going to be inherited from the leading ledger.
Right. So when we run a report for L2 ledger, in that case, half of them will be the transaction currency will be in INR, and some of them will the transaction currency will be in USD.
Then what I will do here, sir, I'll create a separate currency setting. So what I will do here, if I come back and if I see here, I'll create one more currency type. So I'm just canceling this, sir, just for example. So what I will do here for L2 or maybe. So what I will do here, so anyhow, your 1710 is going to be, the 10 is going to be the USD and 30 is going to be the group currency. Now what I will do, I'll create a separate currency called as the C1 and I will assign in a freely defined currency.
Okay. Got it.
Because I have 8 freely defined currencies, sir, so I can use these options. Okay, so whenever I require for any reporting systems over here. Clear, sir? No?
Yeah. Thank you.
Okay. Now, this is about the concept of leading and the non-leading ledger. Now, when you come to the accounts approach, because if I don't want to create any ledgers, Mahesh, don't create any separate 3 ledgers for assigned to the company code, which is having the same leading ledger. Why can't you assign the accounting principles? So, because I'm clearly specifying that for India, I had to report in Ind AS, and for Germany, I report in the local GAAP. Why can't you create a new currency type? So why can't you maintain all these 3 accounting principles to one ledger? Then in that case, I should not call it as a ledger approach. I should call it as an accounts approach. Then very, very important here. Means what I have to do here, one ledger. What I have to do here is one ledger. I'm using only one ledger. Then I don't have the concept of non-leading ledgers over here. I don't have the concept of non-leading ledgers. Then one ledger. If I go to the company code setting, I can see my company code is assigned to the ledger OL by default, I can see. And if I double click on here, I see that. So there is one message has come over here. What is that message? I can see here, you have assigned 3 different accounting principles to one ledger. Instead of creating 3 individual ledgers, you have assigned all the 3 accounting principles to one ledger. There is a message there. You have not set indicator as a parallel accounting by the GL account. This is what exactly I'm getting the information only. That is what you have not set indicator parallel accounting by the GL accounts for OL 720 means you have assigned multiple accounting principles. See the information here. You have assigned the multiple accounting principle to the combination of OL and the company code 7010. But for this combination, you have not set the indicator parallel accounting by the GL accounts. So what is happening here? Then you are making a mistake. Then what I have to do to correct that mistake? If I have all 3 ledgers, all 3 accounting principles to one company code, just come back to the company code settings for the ledger. And where is your company code 1710? Just go back and you need to select the check, but the system is asking you to select the checkbox. Why? Because for the local reporting for India, for Germany, and for Australia, you need to create a separate set of GL accounts. Because I need to address through the GL accounts because I'm not creating the ledgers. So that is the reason now you need to select the parallel accounting for the ledger approach to the accounts approach. So that difference comes here when you are assigning multiple accounting principles to one ledger. If there is no accounting principle concept for the ledger, then what I will do, I'll create one ledger, I will assign one accounting principle. I'll create another ledger, I'll create one accounting principle. Then in that case, you are deviating from the accounts approach to the ledger approach. So no need to select this option. Very, 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 very important. So that is the basic difference between the ledger approach and the accounts approach. Any doubts between the ledger approach and the accounts approach, and what is the leading ledger and what is the non-leading ledger?
So there is, we are going to make only one profit income statement for our leading ledger because it is only legal entity. So for India, Germany, Australia, it is like we want to know how much expenses or income we
Exactly,
have
madam.
there. But
Exactly.
we don't need to make any income statement for India, Germany, or
But
Australia.
here there is option is there, madam. So here, if you want to see the income statement or anything here, see for example here, if I have a financial statement /n F.01, I'll tell you all these things when we are seeing the report. But for your clarification of the doubt, just I'm explaining. I'll go to F.01, and here this is what exactly my financial statement. So to which ledger you want to see the see, there is option is there called as a ledger. If I want to see my, because my company code is only one, madam. 1710 is only one company code because all the ledgers have been assigned to only one company code. Now here, to which ledger financial statement you want? If you want to see for OL, I will give the OL. If you want to see for the L1, I will give the L1. So here I have an option to see my financial statement based on my ledgers.
Okay, okay, thank you.
Now, what is the fiscal? Now, always I'm talking about fiscal year, fiscal year, fiscal year. What do you mean by fiscal year now? Okay, now I'll come to the point here. Okay, you're talking what is the fiscal year, fiscal year. So fiscal year is nothing but financial year. So if I see here, one fiscal year is going to be Jan to December, another fiscal year is from the April to March, another fiscal year is from the October to September. What is the fiscal year? Fiscal year is nothing but a financial year. You are doing your accounts opening and closing for a particular year. So that we can call it like we have academic year. Okay, we have a calendar year. Now at the same time, we are going to be talking something about the fiscal year. In SAP terminology, fiscal year is nothing but it is the financial year. So how you define this financial year? What exactly I need to take into consideration. So normally when you want to derive your fiscal year, there are different types of fiscal years are there. One fiscal year is falling same as your calendar year. See, for example, I told that Jan to December. Jan to December is nothing but my fiscal year, but it is falling under the same calendar year. Some fiscal years are there, which is not same as my calendar year, which will be starting in the mid of the calendar year and ending in the mid of the calendar year, something like April to March or October to September. So there are different types of fiscal years we have to maintain in SAP to address the financial statements. So there are three types of fiscal years are there. Year independent, year dependent, another one is shortened fiscal year. There are three types of fiscal years are there. One is year independent, one is the year dependent, another one is going to be called as the shortened fiscal year. I'll discuss more into that each and every point. Okay. Now first, how to define my fiscal year? Okay, now we are in 2020. Now we are in the calendar year. I'm talking about the calendar year only. Okay. So we are in the calendar year of 2020. This is my calendar year. When I call it as a calendar year, it is coming from the Jan to December. When I call it as a calendar year, it is coming from the Jan to December. So what I'm going to do, months, how many months will be there? 12 months will be there. Days, periods, and year shift. I'll tell you what is the year shift. Year shift. If my fiscal year is same as my calendar year, so for example, I'm going to be taking my fiscal year is from the Jan to December. Yes, it is going to be falling under the same calendar year. Now, how many months will be there? 1 to 12 months. Twelve months, very good. So normally, I'm taking about my months here. Okay, 1 to 12 months. This will be under the calendar year of 2020. Please make sure that this is the calendar year of 2020. Days will be 31, 29 or 28, whatever it may be. Okay, so 31. Okay, this is my days. If I calculate, if I add sum of all the days, it should come 365 days, 365, 364 days. Okay, now what do you mean by periods over here? My calendar year is same as my fiscal year now, 2020. My fiscal year is also going to be the 2000. Just one, okay, just 15 days back, I closed my last year closing balance. Last year, 2019 has been closed. Now I'm opening a new fiscal year for my company code called as 1710. Now, every postings you are making in a month, for example, January to the month of December, I call them as the months according to my calendar year. I should not call them as the periods if I'm calling it as a calendar year. But when I'm calling it as a fiscal year, when the same calendar year I'm calling it as a fiscal year, then each and every month should be called as a period. In which period? So if I see here, okay, so when I come here, when I see here, every postings you are making in the period wise, not monthly. So if I do, for example, now here it is asking for the period, not for the month. So if I give the date from January 1st to till the month of January 31st, all the days will fall under the period of one only. That is what exactly we call it as a January. But SAP doesn't know it is the January, February, March, or April. We have to define that. SAP is the domain of. You have to do the standard configuration. You have to do the configuration so that SAP has to know if this period one is January, or the period one is April, or the period one is October. I'll explain all the concept. So now all the periods we will define as over here. Now, what is the period? The first period is going to be the same. Now, according to my calendar year, the periods are going to be same as my fiscal. No change in that. No change. Because I'm using Jan to December. Because I'm using my fiscal year is going to be the Jan to December. I'll write here. My fiscal year is going to be Jan to December. What is a year shift? If your periods are short, within the same calendar year, then I'll go for the year shift for the 2021. But in this case, all the periods are falling under the same months of my calendar year of 2020. So no need to go, because I'm fulfilling my fiscal year concept. I have 365 days and I have 12 periods within the same calendar year. No need to go to the year shifting. Year shifting is not required. So what I will do here, year shifting is not required. So I'll put it as all the zeros. Now, if you see here, this is my structure. This exactly, I call it as my structure now, my fiscal year variant. This is for Jan to December. Now I take one more example. It is April to March. I'm taking April to March. Calendar is going to be the same, sir. I'm not going to be changing the calendar year. Calendar year is always going to be the same. 2020 is nothing but my calendar year. So if I take this same structure and if I paste here, calendar year is going to be the same 2020. I'm not changing the calendar year. So let me remove all these things. Now, because I'm moving out from the Jan to December to April to March. Now what is happening here? April is nothing but my first period and the March is nothing but my closing period. So April is falling. April to till the month of December, they are falling under 2020. January to March will be falling under 2021. See the difference here. See the difference. So my first period will be here. So April month will become my first period. So April month will become my first period, and 12th month is a December, which will be coming under the month of October. So April, May, June, July, August, September, October, November, December. Now see here the difference. But when I see the December, according to the months, it is the 12th month, but according to the periods, it is the 9th period only. It is the 9th period. Your fiscal year is from April to March. So in this case, what is happening till the 9 months, there is no year shifting. There is no year shifting. So the concept is very clear. There is no year shifting. But this is not a complete fiscal year, my dear friends. This is not a complete financial year because it is not satisfying my principle because you have only 9 periods. If I call it as a fiscal year, it should contain 12 periods. So what should I do, sir? What should I do? I have to go to the year shift. Year shift for the next calendar year. So what is my next calendar year? So then here these 3 months, I'll put it here. And this is 2021. 2021. Now see here. 2021, year shifting to the next calendar year. Please, people will confuse over here. You're not doing the year shifting to next fiscal year. You are doing the year shifting from one calendar year to 2020 to 2021 calendar year. But in 2021 calendar year, I see it from the Jan to December, but I want to make it as a fiscal year from April to March. So what I will do here, this will become my 10th, this will become my 11th, and this will become my 12th period. But how do the SAP knows? Then I have a concept called as year shifting. So what I will do here, -1, I'll put it as a -1. This -1 and -1 means -1 is nothing but you're moving from the year shifting from the 2021 and making it as a fiscal year as a 2020. Very, very important. Now, till here, from here to here, so in 9 months plus 3, totally 12 periods are going to be falling under the April to March for my 2020. This is my 2020-21 financial year. Very, very important because all these 9 months are falling under the same periods of my calendar. So that is the reason there is no year shifting is going to be required. But to satisfy my accounting principle, so to satisfy my accounting principle for my accounting for India, so what I'm going to do here, I am defining the fiscal year. To maintain that, I'm also considering January 1st, 2nd, 3rd, that is 3 months of year 2021 should fall under the fiscal year of 2020, so that I'm going to be taking -1, -1, -1. What do you mean by minus? It will minus these 3 periods and it will add into the 2020 financial year. And when you completed the March, understand that, okay, you have completed the year-end closing activities for the month of March, then the system automatically, it will start calculating again the same. This is what exactly I call it as a year independence. Again, your first period will be starting with from the same component. Again, what I had to structure here? No. So it's a one-time activity. No need to change. No need to change. During the project implementation itself, only you are telling to the system that this is my calendar year as the same as my fiscal year, and this is my fiscal year, which is non-calendar year fiscal year, which I'm going to be considering it as the April to March. So how do the system knows that these 3 months will be the shortened periods for the current year? So I'm putting as a year shifting as a -1, -1, -1. If it is a -1, -1, -1 means these 3 periods are going to be considered as the periods for 2020 fiscal year. 2020. So what I will do here, just I'll copy this 3 and like this, it will be look like this. It will look like this. So what happened to the next one? The next period, next year, I can't see like this. So the next year, it will start from the April and again, it will go to the same like this. Next year, this is next year, like this. It will follow the same principle. No need to change anything. This is the April to March. Clear, all of you? The difference between the calendar year, the fiscal year, and the non-calendar year, the fiscal year.
Yes, it is clear. Thank you.
And We have October to September also we are going to be defining, but there is a problem is there. October, November, December. So you are in the same calendar year. You are in the same calendar year. But your periods are starting from the month of, no, I'm not going to be taken. Okay, so I'll just remove this. But your periods are starting from the month of October. October to September. Then there is a problem is there. Only 3 periods are coming under the short end here, and the remaining 9 periods, remaining 9 periods are going to be falling under the next fiscal year. How it is going to be treated? Okay, tomorrow we'll discuss the same concept about that. So tomorrow we are going to discuss what is year dependent, what is year independent, and what is a short end fiscal year. So this is the structure of your fiscal year variant. So there are standard fiscal year variants are also there in SAP. No need to create this structure already. SAP is providing you standard fiscal year variant. So you can directly go and assign K4, V3. These are the, I'll tell you what is the fiscal year variant. V6 and V9. K4 is nothing but it is the Jan to December. V3 is nothing but April to March. These are the standard SAP defined. Okay, so directly you can go and assign V3 to company code, K4 to company code. It's called as, okay, so it is called as July to June. And this is going to be called as October to September. So already these 4 fiscal year variants are available in SAP, my dear friends. Okay, no need to create a separate fiscal year variant. So if I go here, already if you see here, K4 is there. K4 is the calendar year, same year. Next, I'll have a V3. V3 is nothing but April to March. V6 is nothing but July to June. V9 is nothing but October to September. I have all these things. So if you see here, I have already. So no need to create a separate fiscal year variant directly because already system is providing you everything. So directly when I want to assign my fiscal year, so for my company code, I will directly go and assign whether it is a K4 or V3 or V6 or V9. It will be directly assigned. And this will be automatically get assigned to my ledger. So tomorrow, this is the point we are going to be discussing. This will be by default. If I see here, if I take my ledger OL, if I double click on my company code, and if I see here 1710, see here, by default, I can see K4 is getting defaulted to my company code. So tomorrow we have a very good important class. Okay, so don't miss the class. Tomorrow we are going to discussing the posting periods and the fiscal year variant also tomorrow. Okay, thank you very much, all of you. Have a great day.
Thank you.
Yeah, thank you.